Hi, welcome to Curious Bricks. Today we're going to talk about Adobe Inc., ticker symbol ADBE, Q4 2020 earnings report. Due to the pandemic, Adobe decided to combine its Q4 earnings update with the financial analyst meeting during this call. The call was hosted on December 10th, 2020. Adobe is part of S&P 500 index under the information technology sector. Since this is our first time covering Adobe, we will start with a quick overview of what Adobe does and how they make money. Adobe is one of the leading SaaS company with roughly $13 billion revenue. The company offers a variety of mainstream software such as Adobe Acrobat, Photoshop, Adobe Flash, and Adobe Sign, etc. Adobe divided its business into three segments: digital media, digital experience, and the newly created publishing and advertising segment. Digital media segment represents 70% of total revenue and is further divided into Creative Cloud and Document Cloud. Creative Cloud is a subscription service that offers a large number of Adobe products. Document Cloud sells Adobe Acrobat family of products, as well as Adobe Sign and Adobe Scan. In contrast to a heavier consumer market focus by the digital media segment, the digital experience segment only sells to the enterprise market. This segment is further divided into three groups: data and insights, content and commerce, and customer journey management. Lastly, the publishing and advertising segment is the smallest among all. Since Adobe offers a broad spectrum of products, they compete with many large and smaller companies. Here, I have listed a handful of notable competitors within each segment. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 18, 2020, Adobe share price is $503, and its market cap stands at $241 billion. The trailing price-earning ratio is around 46. Currently, Adobe does not pay out any dividends. Now, let's take a look at their latest financials. We will start with the income statement. For the fiscal year 2020, Adobe reported total revenue of $12.9 billion, which is 15% higher than fiscal year 2019. The revenue growth is driven by the strong growth from subscriptions. Digital media segment grew 20%, while digital experience segment grew 12%. Throughout the full year, Adobe continued to invest in sales and marketing and R&D to support growth. In fiscal year 2020, Adobe reported total operating income of $4.2 billion, which is 30% higher from a year ago. Now moving to the balance sheet, Adobe increased its cash on hand by $1.8 billion to a total of $6 billion from a year ago. Meanwhile, long-term debt also rose by $3.1 billion to $4.1 billion. Overall, the company's liquidity is quite strong. During this meeting, the management provided key highlights on each of the segments for fiscal year 2020. Creative Cloud continues to attract new customers. It has strong retention and engagement on single apps, such as video and photography offerings. Document Cloud also had a solid year. Adobe Sign sees a growth inflection in 2020. On the Experience Cloud, the Workfront acquisition was closed in early December. Adobe is seeing strong enterprise adoption of content and commerce. The company also provided an updated view of the total addressable market for each of the segments through 2023. In this update, we are seeing significant increase of TAM for Creative Cloud. Moving to fiscal year 2021 guidance, revenue is expected to grow to $15.15 billion. GAAP EPS around $8.57 and non-GAAP EPS around $11.20. Lastly, the company announced a new $15 billion share buyback authority through end of fiscal year 2024. During the Q&A session, some analysts inquired about the business outlook post the pandemic. The management believes the business now faces tailwind across all three segments, especially on the document side. Digitization becomes a phenomenon globally. Usage of electronic documents as well as the automation of business workflow significantly improves. One analyst also asked about the future strategy on the single app versus full app model. Single app pricing and APRU is a little bit lower than full app, but single app is the area where Adobe acquires new customers. The company aims to convert these customers into the full app in the long run. Regarding the digital experience segment, one analyst asked which are the priorities among the three growth pillars. Adobe is seeing tremendous demand from the content and commerce market because any company that didn't have the ability to transact online is now seeing headwinds in the pandemic. Within the data and insights, Adobe is also seeing significant momentum in Q3 and Q4. Lastly, one question was asked on the rationale of creating the newly created publishing and advertising segment. The short answer is the management does not see strong growth in either of these markets, hence it was carved out from the rest of the business. Now let's take a look at Adobe's stock performance before and after the earnings call. Adobe's reported quarterly revenue of $3.42 billion beat analyst expectation of $3.36 billion, and its adjusted EPS of $2.81 also beat consensus of $2.66. However, the market had a negative reaction after earnings release. Lastly, here's the latest summary of analyst ratings of the company. Currently, there are 31 analysts covering Adobe, and we're seeing most of the analysts gave the rating of either buy or strong buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.